Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you today with our weekly wrap-up. Graham, can you shed some light on what happened in the markets last week?
Yeah, thank you, Stacy, and thanks for our listeners just being on the call today. Pretty muted market last week, even though we did see some CPI numbers in terms of inflation moderate a bit. So that's a positive thing. But I think that the market was still maybe a bit more concerned about the Fed having to raise rates again, maybe staying higher for longer to bring inflation down a little bit more. And what that might look like, certainly as we're moving into earnings right now. I know that's raising a concern, what they're going to look like. So we saw the Russell 2000 index rise about 1.5%. The S&P was up about 0.8%, and the NASDAQ was fractionally positive. We did see 7 of the 11 S&P sectors positive. What led the most? 2.8% in financials. Big earnings. They started off the earnings last week. Wells Fargo, JP Morgan, Citigroup reported really solid earnings, really bolstered that side of the market. Crude oil continued its rise. I think we got a 4-week stretch here of increases. But we did get a statement from the IEA. They said that they expected global demand to rise to record highs this year. So that's continuing to buoy the oil area. Gold did slump on Friday, even though it did tap at a 52-week high or touched it briefly. Cryptocurrencies continued to rise. Bitcoin, Ether really soaring 8 and 11% respectively. If we look at the U.S. Treasury yields, they climbed despite March's CPI rising the slowest pace since May of 21. So I think we had the core CPI number at about 5.6, CPI at about 5. So we are seeing it moderate. Some areas are moving up, but for the most part, we're seeing some moderation. And again, I think the overall fear that the Fed's still going to do 25 basis points, and I think we have to expect probably staying higher for longer to put pressure on this inflation. Let's go ahead and jump internationally. China's CPI fell to an 18-month low. Producer prices plunged 2.5% year over year in March. So they may have to bring some stimulus to bolster the economy. We think about central banks over in Europe, internationally, Australia's. They have a stronger than expected job data, suggesting that maybe the RBA over there may have to consider tightening. At the same time, we saw reasonable growth in the first quarter GDP over in the UK.
Okay. Well, Graham,
Yep.
let me ask you this. You mentioned that so far the markets have done really well this year. Do you think this is something that's going to continue as we really get into the earnings season?
I'd like to believe so, but I think we also have to expect, maybe a pause that refreshes, right? I mean, we
Right.
come out of the gates pretty strong. Couple percent up for the Dow, about 18% for the NASDAQ or something in that range, 7% for the S&P. So, I mean, I think we have to expect that maybe we end the year somewhere in these levels, but I would not be surprised to see maybe a pause that refreshes. But again, this is all going to be dictated by earnings right now. This is probably the most watched earnings season that I can recall to see if earnings are really falling off a cliff, which we don't believe they are. That is moderating with the consumer demand moderating, corporate earnings moderating a little bit, the economy slightly slowing down. So we just have to see how much before we get too excited, right?
Okay. Well, thank you so much for that information. And thanks to everyone for joining us today. I do want to mention that we have our retirement planning class for May scheduled at the beginning of the month. We have the details on our website, and we will be posting those regularly on social media. And speaking of social media, we do put all of the latest, greatest information on that for you. So please take advantage of that and stay up to date on all the news that we have for you. Thanks so much for joining us today, and we'll look forward to seeing you again next week on the weekly wrap-up. Thanks.
Take care.